of excellence.
All right, it's a Tuesday morning. You're with us here on Bazaar Morning Call. Harold van der Linde is head of Asia Equity Strategy at HSBC. He's joining us now. Harold, we lost you there. Good morning, and thanks very much for being with us here on the program. You know, what a week India has had. The outperformance has only strengthened the grip that bulls have on this market has tightened, if anything. And most people are now calling for FIIs to return to this market in a big way. They're saying that many will prepone their decision with the political certainty, etc., very visible now. Your thoughts?
Yeah, no, I agree. I mean, we spoke about this a couple of weeks ago, right? We said, listen, we're going to be close to that peak in interest rates in the US. We'll see, of course, what comes out and what the Fed is going to say over the next 24 hours or so. But you've seen a marked decline in bond yields. That's good for everything, to be honest. We've seen a rally in equities globally, in high yield bonds, in investment grade, you name it. In particular, tech has done very well. So that works out well. Now, when we spoke last time around, India was slagging a bit, but we said, listen, the overall earnings growth story in India is looking pretty good. So we're willing to stick with our kind of positive view on India. That's worked out well. The politics is probably not as big as an issue in India for an equity investor as it is in other parts of Asia. We've got a lot of elections coming up. Indonesia, for example, going to have a new president. So we don't know what's going to happen there. But there's definitely going to be a change of president because he's at the end of his term. So there's a bit more uncertainty there than, for example, relatively speaking, what is going on in India. So that means that India continues to look pretty good. Decent earnings growth is coming through. What is there not to like in that market?
Harold, hi, good morning. You've liked the Indian markets for a very long time now, so that's always a good thing. But I wanted your thoughts on the here and the now. We have some news flow on Infosys where the CFO has resigned. And of course, there's going to be a sentiment hit over there. But you've tracked this space very closely for a long time. Do senior level exits perturb you as a long-term investor in stocks like Infosys?
See, senior people move on, right? So that is just a fact of life. So you have to look at the underlying reasons. So in China, we've had companies where also senior management changed, and that meant a clear focus on the direction of the company. Now then, as an equity investor, you got to say, well, am I happy with that? And what is going to happen? And this is not maybe always clear to me. Then it comes with risk. But if it's not really a change in say, the future prospects for the company and these sort of things, then it's just somebody else that is steering the wheel or is making some of the decisions. So that's the way I look at it. So it doesn't have to be necessarily bad. We all turn 60 at some point in time, 65, and decide to move on and do something else. So that's the way I look at it. It really depends on what's really happening with the company.
All right. Hi, Harold. Morning. Good to see you. And Harold, the next big event in the next 48 hours or so, we'll hear from the Fed, with regard to the decision. But I'm looking at the Fed rate futures. They are pricing in a 40% probability that we see rate cuts in the initial part of 2024. Are you in that camp?
No, we think that the rate cuts will come a little bit later into 2024. And I think if there's a risk to markets, it's exactly this, that the market is already anticipating quite substantial rate cuts coming through, and that we might get disappointed in that. That means that we have to recalibrate, the bond yields go up a little bit, and the equity space comes down a little bit again. But I just see that as a recalibration. I don't think that's a structural shift. So that means that, maybe we'll have some weakness on markets if we are correct in that. But it's not something that I'm overly worried about. I just see that as a near-term correction. The overriding term is that those interest rates will go down. It just depends on when that's going to happen into 2024. At least that is the market's assumption at the moment. But I think the market is probably getting ahead of itself a little bit in terms of the timing of this. It's probably going to be a little bit later than what the market is willing to really price in.
All right, we will let you go on that note. Thanks a lot for joining in. Appreciate your thoughts here. So that is Harold Vanderlyn with his view on the Indian markets. He's been liking the Indian markets for a very long time now, and he hasn't changed that view. And he says that senior level exits happen all the time with companies, so one shouldn't be too perturbed over there.